Okay, so welcome to our recorded lecture for bank reconciliation. Bank reconciliation is used for good control of cash because it will be able to determine what are the deposits that's still outstanding or checks that have not yet been cleared, okay, or any checks that had been withdrawn which are not recorded in the cash at bank ledger. So bank reconciliation works when we have a bank statement provided by the bank, okay, which will include the deposit and withdrawals that the bank had recognized, as well as those interest income or interest earned from the deposit and the service charges. So it should be noted that the bank statement is from the bank's perspective, so which means the deposit on bank statement will be on the credit side, while the withdrawals will be on the debit side. Now, important term that you have to remember is the dishonored check. These are the checks previously deposited and it bounces, so which means the customer checks doesn't have funding. So what you will do in bank reconciliation is compare the bank's record, which is the bank statement, against the business own record. So that will include cash receipts journal, cash payment journal, and then cash at bank ledger. So the bank has maintaining its own record, independent record, and then as you have your own record also, you will try to compare these. There are certain reasons why the balances might be different, or there will be variation on the difference or the difference between the bank balance and the cash at bank ledger balance. So the first one is timing difference. As I mentioned a while ago, there are checks that may have been outstanding, so which means we recorded it as withdrawal in our own record, but the bank have not yet recognized it. Maybe it's too late for clearing, or maybe the bank had not yet received the check from the receiver of the check. And then we have outstanding deposits. Okay, so those are deposits that we made to bank, but the bank record or the bank had not yet recorded it. So unpresented check, we call it outstanding check, or sometimes we call it outstanding check, while outstanding deposit, we sometimes call it deposit in transit. And another reason why the bank balance and the cash ledger balance may be different will be certain error made by the bank, or error made by the company's own finance record. So this will be the procedure, okay, in performing reconciliation. Okay. So first thing is compare the amount listed in bank statement to the previous month's bank reconciliation and the current month's cash receipts and cash payment. The reason why you want to check your previous bank reconciliation is that the previous unpresented check and outstanding deposit may have been cleared or received or recorded by the bank for this, let us say, for this current month. Okay, so previous month it's still outstanding or unpresented check, but this month it's already cleared. And then you have to check whether those items that presented in bank statement are reflected in the cash receipt and cash payment journal, vice versa. So the next step is match the individual deposits recorded in bank statement with the deposit recorded in cash receipt, and place a tick near each items appearing in both places. Okay. Then match this also with regards to checks or withdrawals made. Okay, so put the tick near those items that will appear on both places, and check whether those check numbers are correct with the corresponding check amounts. Step 2. So when you tick those items which appear on both statement or records. The next step that you will do is to check those unticked items. Okay, so these are items initiated by bank included dishonored checks and cash transaction made directly through bank, okay, but not yet recorded in business records. There should be entered an appropriate cash journals and tick in these records and on the bank statement. And any remaining unticked items on cash receipt journal are what we call outstanding deposits. So which means the bank have not yet cleared these deposits. And for unticked items in cash payment, those are what we call unpresented checks. Any unticked outstanding deposit and unpresented check from the previous bank reconciliation are carried forward as reconciling item. So there might be chances that in our previous bank reconciliation, there were items that outstanding or unpresented, but until now, for this, let us say for this month, it's not yet cleared. Okay, so meaning again, it might be part of the what we call reconciling item. Step 3, cash journal should be totaled and posted in cash at bank ledger account. The balance on account should be then determined. So you will have to create or you have to compare the journals and see whether that will be reconciled or equal to the cash ledger or cash at bank ledger account. Bank reconciliation statements can be completed starting with the balance per bank statement. So you start from the bank reconciliation items that increases the bank account, such as outstanding deposits, should be added, and any items that will decrease, such as unpresented check, should be deducted, okay, as per bank statement. Alright, so we have a sample problem here. So ABC Limited has the following information pertaining to cash at bank as at 30th April 20x1. So take note that we had already done those ticking of the amounts or items in bank statement, cash ledger, cash journal, and cash receipt and cash payment journal. So after we did that, these are the information that we have. So cash balance or the balance of cash at bank account before any adjustment from the bank was 22,100 kina. The balance shown in bank statement was 24,160 kina. The bank recorded a collection of cash from ABC Limited customer and credited to ABC's account 1,600 kina. Bank charge was 40 kina. ABC Limited's deposits 2,000 to bank but was late to be included in bank statement. Unpresented checks were as follows: check number 101, 860 kina. Check number 102, 1,020 kina. And check number 103, 620 kina. So our requirement is to prepare bank reconciliation and journalize the necessary adjustments. Okay, so you can see in this problem, the cash at bank account and bank statement balance are given. Now, the third bullet you can see here, that is a collection made by the bank, okay, in behalf of ABC Limited. So this is an item appearing in bank statement but not or have not been recorded under cash at bank account. The fourth bullet here, bank charge of 40 kina, that is the the charge made by the bank on their services. Okay? This one will have not yet appeared in cash at bank account. So meaning bullet number 3 and 4 we need to adjust so that the cash at bank account will be adjusted. Okay, the fifth bullet here, this is a deposit made by ABC Limited, but problem is it was too late to be reflected in bank statements. So which means this is one reconciling item that we have to consider in calculating the adjusted balance. And then unpresented checks, check number 101, 102, 103. These are checks which we call outstanding. So to get the adjusted balance of the cash, so we need to consider this in calculating the bank balance or the adjusted bank balance. Okay, so let's show the solution here. Okay, so cash balance per bank statement, so it was given 24,160. Then add outstanding deposit of 2,000 kina. Okay, and then we have unpresented checks number 101, 102, 103. Okay, get the total. So we have adjusted balance of 23,660. Now the cash at bank ledger balance should be equal to 23,660 when adjusted. Okay, so let's see the checking that we have done on the next page. So cash at bank balance as of 30th April 20x1, we have 22,100 kina. Then add credit memo. Credit memo is the collection made by the bank, okay, from the customer of our company, that is ABC. And then debit memo, that will be bank service charge of 40 kina. So the adjusted balance here is 23,660 kina. Same with the previous balance that we have shown. Now, you are not supposed to do adjustments on the reconciling items which appears, I'll return to the previous slide, which appears here that outstanding deposit and unpresented checks are not subject to any adjustments on your cash at bank ledger balance because these are already recorded. The thing that we have to record will be those items that which which appears in bank statement which have not yet recorded under the cash at bank ledger. So those are credit memo and debit memo. Okay, so for adjustment, so to record the collection made by the bank from our customer or ABC Limited's customer, that will be debit cash at bank, credit accounts receivable 1,600 kina. Now to record the bank service charge, so debit bank service charge and then credit cash at bank. So when you adjusted this one, it will have adjusted balance for cash at bank ledger. So that's it. Thank you for listening to my recorded lecture. Hope you learned something.